and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Apologize for being late. There's some production issues I had to deal with, but we're good now. Well, Russell is here. That's good. We're streaming. That's good. And we have questions. Fred, Ted, Bill, John. No apologies. Let's go. Better late than never. Ring the bell. All right, let's do this. Happy Wednesday, Russell. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. This is my brief bio. The disclosure is very important. If this is the first time you see this slide, I encourage you to pause the screen and visit the link. Mark, Russell, welcome back. I'm not a financial advisor, not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education for me. Let's jump into the market. I mean, today we have Fed decision, right? Fed decision. QQQ is, we're still pre-market, slightly higher, kind of on its way to retest basically the recent low. So QQQ is underperforming. Yesterday, big sell-off, not big, but 2% pullback yesterday in QQQ. We're back to consolidation. We talked about this bottoming process. We definitely have signs of the bottoming process. That is a yes, right? It's been 5-6 days where we're not making new lows. So we are building the bottom. Bottoming process usually is pretty violent. The way I look at it is there more room to the downside than to the upside. And I would say right now there is more room to the upside, at least short term. At least short term. There's more room to the upside, usually 50% retracement, maybe 26 for these Fibonacci retracements, right? So somewhere here, we could retrace back, right? Because market is oversold. But, we could also break the lows, right? And, trade lower. But I still think more room to the upside than to the downside short term, right? So short term, either this week after the Fed decision, and we do have options expiration, right? Any positive news like Russia, Ukraine, signing ceasefire, and it might not matter today, but on Friday or next Monday it will matter, right? The positive news because of the positioning, and then you have a strong rebound. Obviously, the same could be argued on the downside because of the positioning, so you have to be careful. But purely from technical perspective, just chart is oversold. Short term should be a bounce. The only concerning sign from most of the research I follow and from our model is basically this chart, 6 months. Going into this month, model predicted that 584 was support, and we're not going to go much lower than 584. We hit 550, right? We've seen during recession in 2020, the jump in volatility, right? You can't really train the model on VIX. But because VIX went from 15 to 30, that means that the range that the model predicted is, that is something we've seen before. But the problem is going into this month, we already seen that the long-term trend is losing momentum and basically flat up 2%. Because we oversold by 5%, and assuming March we're not going to close, at 600 or 613, which I don't think we will. I don't think we're going to have a V-shaped recovery. I mean, if we have V-shaped recovery, then momentum continues. But if we don't have V-shaped recovery, even if we retrace, let's say, half of the losses, 5% move, this vector is going to turn negative, right? So the long-term trend is turning negative. So I think if you're short-term aggressive trader, you might want to try to catch this retracement. If you're more of a medium long-term, I think the strategy should be selling to the rallies, right? When you see this retracement back, you sell, right? So spiders, overhead resistance, first 580 is the strongest overhead resistance. Right? Obviously 570 is the first resistance. So I would say resistance 1, this one is small. Resistance 2 is much bigger, right? And 600 is probably going to be much harder to break through, right? So these are much stronger resistance. So small resistance, medium-term resistance, long-term resistance. I mean, all three are possible, right? If we sign ceasefire between Russia and Ukraine, permanent ceasefire, and Powell is going to say economy is doing fine, we're going to start lowering interest rates, nothing to worry. I mean, we could have obviously bigger retracements. But those are the levels to watch, and obviously on the downside, this is very important support. I mean, short term is 560, right? This is yesterday's bounce. So if you're day trading, you would look at 560. If you short-term trader, you would look at the 550, and then anything beyond 550 is the fair game, right? The next level is probably 530, and bigger support number 2, and then 500 is much bigger support. So that's how I would think about the market. Right now, it's kind of short term. I think bounce is in order, right? We try to bounce, on Monday, Friday and Monday. We'll see today after Fed decision. Market is on the edge. So if Powell is going to come out and sound more positive than negative, we'll have a bounce to the higher side. If he's going to sound more negative than positive, then we're going to have a drop. So I think this range is going to be taken out, by sometime either this week or next week. We're either going to try to break to the upside, or we're going to try to break to the downside. So you have to be ready for both scenarios. I would look at the spiders or QQQ, and same thing. Yesterday, if QQQ was down 2% and you were up, 4%, that means you have too many hedges. Probably want to trim it in case there's a positive news. If the market was down, if QQQ was down 2% and you were down 4%, that's probably you have too many bullish positions. Maybe it's time to trim some of your bullish position, maybe trying to add the hedges. So I would look at the portfolio delta, I would look at portfolio beta, based on what you're trading, and make that decision, and be ready for both outcomes, right? Because if somebody knows what exactly is going to happen, let me know. I want to know, right? But if you don't know with 100% certainty, then best case scenario, you need to be ready for both outcomes. You could be bullish short term, like I am, right? Which is fine, but that doesn't mean it's going to happen. Okay. Any questions? Meanwhile, going into the Fed decision, 10-year is pinned to 4.3, positioning matter, right? Everybody's saying that bond market, especially during pullback and recessions, you want to look at the bond market, right? That's the consensus, at least amongst the economists and top to bottom approach, right? If the 10-year is pinned to 4.3, it's not making sharp move to the downside. It's not making sharp move to the upside, right? Here we were concerned about the recession, but looks like these fears kind of subsided around 4.3, around 200-day moving average. So that's positive, right? If the probability of recession is going to escalate, you're going to have a sharp drop to the downside, right? If the fears of hyperinflation or stagflation, then you're going to have a sharp rebound, right, in yield. But if it's stable, that's good. Dollar, same idea. Sharp drop in yield, I think is actually, in dollars, I think is actually good, right? Because most likely it's because people are buying Europe, you're buying yen, that global economy is expanding and not as bad as everybody thought. They have a stimulus in Europe, right, printing, trillions of dollars or billions of dollars. I don't even know how much they're printing. But, Germany is expanding and the European Union is expanding and China is doing well. So those are all good signs, right? If the China is doing well, right, if the second largest economy is growing, and if the, third largest European Union is growing, well, then the United States is also going to grow. You can't have United States in recession and China and Europe and, copper is in bull market. That doesn't make sense as well. Okay, Bitcoin consolidating. Looks like a 10-year yield chart. So this is a proxy for risk taking. I would look at Bitcoin. As long as we're not pushing to 100,000 or 105, equity market is probably not going to rally, right? Bitcoin needs to start leading the market to the upside. For now, it's kind of wait and see mode. Nvidia, proxy for Bitcoin. Nice rebound off of 105 low, staying above 115, which is important. No really new signs. What else is interesting? Silver pulling back slightly. Gold continues to make new highs, right? stagflation that's been used a lot on the news. So gold rallies, gold miners rally, silver rally. What else? Looks back to 2021 sharp pullback. That's positive, right? The question is there another move to the upside like we had, in December, right? Or sometimes you have these sharp rallies and then second leg up. So I think something like this might happen again, right? They're up and then second leg. Okay, but for now it's lower lows, lower highs. That's good. That's it. Any questions? Fred, Germany is breaking out. I do like Germany. I like China. At least majority of the people like that. It doesn't make too much sense, right? They're stimulating the economy, so that's good, right? They're printing money. They have to take, increase their manufacturing to, if the United States is not helping Ukraine, then that means Germany needs to help, Ukraine. And that means they need to increase their production, right, and how much money they spend in the military. So that's positive, right? So all the recession fears and manufacturing fears kind of overdone, and the chart looks great, right? The chart looks great. Weekly, let's look at monthly. Yeah, it's breaking out, right? It's at all-time high. It's higher than the 2008. It's kind of been in this. It hasn't broke through 2008 since, only in this month. So Germany looks strong, right? Germany looks strong. China looks strong. So yeah, this is definitely where people. Obviously it's overbought. So any negative news, you can kind of, this could be exhaustive, right? So, but on the pullback, I would be buying on the pullback. I would be buying on the pullback. Any other questions? Any questions on Discord? Russ, Cherry Blossom, Elmar. All right, let's see what other sectors that are doing well. Materials, stable, right? It's not making 2025 low, so materials are doing better, right? The copper, aluminum, tariffs. So looks like it's net positive. Home builders broke through 2025 low. They're still weak, right? Doesn't look like there's a reprieve in there, and that's bear's argument, right? Without home building activity and with mortgages high, how can the market continue going? That has been the obviously argument for the past 2 years, and everybody was wrong. Home builders were just going up in a straight line, but now they're not, right? Now they're not, and that, if GDP cannot grow without home building activity, right? Or without local stakes, investments. So that's the bear argument that, economy is cooling, contracting, and we're going to be in stagflation, right? Stagflation, so, inflation will stay around 3%, and, GDP is going to be under, 1.5% or under 1%. So stagflation, okay? It's a good argument. You just have to wait and see. Metals and miners, stable, not making 2020. Well, it did make 2025 low, but looks like it's bouncing, right? The aluminum, the coppers, they're bouncing back. China, we talked about, strong. VIX pulled back. Industrials bouncing back, so that's good. Obviously, euro, strong rebound in euro, strong pullback in dollar. Healthcare, one of the better sectors, rebounds. In consumer discretionary got beat up with Tesla, right? Tesla is in free fall. This is more politics as well as production issues, volume of production. Retail is weak, transportation, bouncing back, but still kind of an uptrend. That's about it. QQQ slightly positive, up 0.5%. Dow Jones up 40 basis points. Spider is up 30 basis points. Okay. This is time to reflect, right, and review your positions. Okay, so let's do that. So Fred had one is the, long position short. I would say right now, If you're short-term aggressive trader, I would be slightly positive, right? Maybe have 2 long position, 1 short position, right? If you're short-term aggressive trader and you like this, up and down action. If you don't like this up and down action, I would be market neutral, right? For 1 long position, I would have a short position because we could be back to, 500, 510, but we could also be down to, 450, 425, right? Both outcomes are possible, so you want to be prepared. Since you don't know exactly what's going to happen, you need to be ready for both outcomes. The only way to be ready is have same long and same short. So I'm going to keep my shorts. Those are the spiders put spread. I want to trade around them. I put 2 contracts intentionally just to show you that, I'm going to try to trade around them and hedge. What happened to my spiders? Oh, I know, I removed them. Okay. Let me fix that. Sorry about that. I don't want to have my... Okay. Okay, one more time. Pivot circle, trader lock, positions, symbol. Okay, so I do have sorry about that. 2 spider positions, right? Put spreads, 540, 550, 550, 540 put spreads. Expires in April, and then the rest of the positions are bullish. So I have an Amazon stock position. I think it's oversold. Let's look at Amazon. How's Amazon doing? Is it similar to QQQ? I mean, it broke through this July. Anything that's below July highs, is in trouble, right? It's a very sharp bearish trend. Short term, it's not making new lows in the past 3 weeks, so that's good, right? And I mean, obviously, it's extremely oversold. So I have a small stock position, right? I intentionally put only half of the position, so I'm going to wait. Broadcom is April 200 to 10. I mean, technology's been under pressure. Broadcom, I mean, similar to Amazon, the only difference is that it's above July lows, highs. So that's, to me, it's positive, right? Anything that's above July high, then they are winners, and anything below, they're losers. Capital One Financial is in trouble. I mean, above July highs, so that's positive, but below this, obviously broke to the snack line. So bearish, but, better than most of the stocks. General Electric is the same way. General Electric is actually almost to all-time high. Maybe I should. Well, let me see. Did I take my profits and run? No. I mean, I do have probably more than. The only problem with GE is that it's May or is it June? It's April position. April position. So it's actually in the money. It's in the money. I bought it at $3.10. I do have a 370. Okay, so I do have an order 60. There's a $220, 10, 325. It's getting close. Okay, I'll leave it on. Okay, I do have an order to close at 370. Okay, so General Electric is getting close to exit. Morgan Stanley, right? I added to Morgan Stanley position. Looks like it's trying to bounce back. Again, it's above that July highs. overbought, so pull back, but now bouncing back. So that's a stock position. I mean, the one that April position is where I would worry right now, right? Because we're approaching end of, March expiration. Market might be volatile. So if we have another leg down, if I'm wrong about the short term, and we have another leg down, then these April spreads will start losing premium very rapidly. So the goal is to, exit if it's 50% loss. Sometimes you can do it, like with the Citigroup, I missed it. And that's it. And those are all the positions. 846. Any questions? Elmar, Cherry Blossom, Rosser on Discord, welcome. Fred. Would I buy pullback? Germany, I would buy. I mean, it's a very strong. It's a very strong. I think having exposure either to China or Germany makes sense, right? This is a weekly chart, very strong momentum, very high volume. This is very bullish, right? So, I mean, it is overbought, obviously, but on a pullback, I would accumulate. Despite what you think about odds of recession in Germany and their manufacturing. I mean, a lot of it is on optimism. I think, that has to do with Russia-Ukraine war, right? So I think if Russia-Ukraine war, does hold, I think that rally will continue. But if it gets worse, then, or they're unable to ramp up their manufacturing, then that would be an issue. But I think as of right now, it looks like a very strong trend. Entry point in Germany, I mean, 37.50 or 38. I mean, you have a strong neckline here, right? For the past 6 weeks, it's kind of trading, to the, as overhead resistance and now support. So I think this is a line of support, and I would buy it if it does pull back to this level. I mean, the only thing is, the bears would argue that we didn't have a capitulation, right? And we did not have, kind of disorderly exits, right? Where people get a margin call and just sell everything. If we do get that, which I don't know if we will, then everything's going to sell off, right? But then I still think it's going to be opportunity to buy. But just do recognize that it doesn't make sense that the U.S. economy is down 10% and Germany and China is up, however, what is they up 30% from January, 25%, right? That doesn't make sense, right? Because if the U.S. is heading into recession, without U.S., Germany and China is not going to do well. So that's kind of a bear argument. So if we will have recession, then Germany and China this is going to be an elevator up, elevator down. But I don't think we're going to know the answer in the next few weeks, or probably not even in the next few months, right? Because the effect of the tariffs, like I've heard this, it's not, even if they do implement tariffs in April, let's say they do, and let's say market does sell off, the question is duration. If it's for a few years, yes, stagflation, repeat of 1970s, 1980s, right? Fair enough. But if it's only for a couple months, you're not going to see that, in CPI and PPI data, or you might see only a small uptick, right? So it's not only the amount of tariffs, but also the duration, right? And you definitely don't know what the duration will be, right? It could be a couple of weeks, could be a couple of months, could be a couple of years, right? I think the consensus is not going to be a couple of years. It could be a couple of weeks, couple of months. And then the effect is going to be minimal, right? But, market usually jumps ahead. All right, any other questions? All right, let's see, where are we? So small caps is also, I would pay attention to small caps and Bitcoin. These are good two leading indicators. And Bitcoin, and small caps already at 50% retracement, right, from the previous cycle high, cycle low to cycle high, right? So from the lows of 22 to the highs of 21 or 24, it gave up half of the gains, right? It gave up half of the gains, 200 level, right? You can see these support levels in previous trades. So if this level doesn't hold, and you have a sharp move to the downside right after CPI data or whatnot, that opens the door to basically 160, right? Another 20% drop. So you know that market is sitting on the edge. I would watch Bitcoin. Bitcoin is kind of the same setup, right? So it'll be clear, if we're going to take out major long-term support levels, right? Bitcoin chart is the same. Right, that's 70,000. If Bitcoin drop, we were at 75,000. If we drop below 70,000, day one, day two on large volume, on lots, on the VIX expansion, then market is in trouble, right? And then the next one, I would look at high yield. High yield is probably one of the most important. High yield is stable, right? That's the bull's argument. That usually, if you want to know about recession, look at the, junk bonds and credit market, right? And it got a little bit weaker, obviously, in the past few weeks, but it's not fallen off the cliff, right? We're still not even at 2025 lows, right? So that would be an argument against a recession or against the bear market. And if it reverses, it's going to start falling apart, well, then something is changing. All right, 854. I'm not sure. In terms of signals, I'm not, in front of the Fed. You probably don't want to be too aggressive in trading. This is more kind of just wait and see. Dollar General, again, is a signal. If you're on paid program, Dollar General is a strong move to the upside again, was a signal. So Dollar General looks good, and then some of the utilities like Duke Energy looks strong, ED. So some of the these are recession stocks, right? People go to Dollar General more if they are, if they're losing jobs, they cannot find jobs, or they're just concerned about the economy, their savings. Then people gravitate toward Dollar General, Signalgut, and Intel, which is interesting. Well, Intel is driven by the news, right? New CEO, turnaround, merger and acquisition, down 5% today. But Intel shows a strong price pattern. And then what else? And Cigna, right? Some of the healthcare stocks. Yeah, so Cigna, strong move to the upside as well. So some of the ideas where people are hiding, right? Consumer staples, utilities, healthcare. Intel, I think, was driven by news a lot. Marchi and Russell. All right. Any other questions? Anything else we can talk about? Earnings. Tomorrow we'll do earnings, maybe Micron or FedEx. But Micron looks strong. The credit put spread, maybe. It's not a horrible idea. FedEx is kind of on the edge. Doesn't look that good, and Nike probably doesn't look that good. Yeah, so FedEx and Nike are weak. Micron relatively strong on medium-term, short-term outlook. So VIX looks like a 20 handle. We haven't had a 20. Oh no, we did have a 20 handle. We did get to 20. Okay. So no new signal on VIX. QQQ up close to 1%. Spiders. So very market feeling optimistic going into the Fed decision. Okay. And so do I. Okay, but anything else you guys want to talk about? Any questions? A lot of people today. Love it. The market sells off. There's always a lot more people. Oh, YouTube. Thank you for joining us on YouTube. I appreciate it. Let's see how many people we have on YouTube. Please hit subscribe if you find this information useful and you're not subscribed. Please subscribe on YouTube and hit the like button. Share it with your friends and families and enemies. All of that is fine. Line. And you're not subscribed, please subscribe. Okay. So on YouTube, thank you. Brian is back. Carol, Claude, Ed, Fred, Harminder, John, Kevin, Larissa, Louis, Marian, Martin is back. Martin, welcome back. Asama, Patrick, Tahir, Ted, Bill, Yeshi. Yeshi, welcome. Thank you for joining. I think you're new. Any questions, Yeshi? I think you joined for short-term trading. So short-term signal, if you look at short-term signal, like on yellow tunnel, sorry, I didn't even show yellow tunnel. Same thing, you can find them under aggressive power trader. I mean, usually there's more signal, but when the market's selling off, and there's not that many bullish signals as it is. So you see the same signal, Cigna, Dollar General, Intel, right? You can look at the history of these signals. You can watch the recording, and there's AI analysis, right? You can type in, spiders or NVIDIA and look at our analysis, right? Short term, we can get to 130. 1-2 months, it's under pressure, right? 120, maybe 130, right? So you do have short-term, long-term predictions. And if you trade in NVIDIA, if it's 113, maybe if you're bullish, you want to enter the position, right? And at 122, maybe you want to trim the position, whether you're doing short-term trading or medium-term trading, right? So it gives you these signals of levels you want to look. If I'm trading any of these stocks, you'll have them under orders. All right, any other questions? Welcome, Yashi. All right, okay, guys, if there are no other questions, then thank you very much. Thank you on YouTube. Thank you on Discord. You guys are awesome. Thank you for your support. Spread the word. Share it with your friends on social media and on GoToWebinar. Thank you for participating. Probably record attendance today. Or maybe because Keith was supposed to be here and you just like Keith better. That is also a possibility. But jokes aside, or maybe not jokes aside, Keith will be doing the closing bell. So please join Keith today at the closing bell. All right, Bill, thank you. Asama, thank you. Thank you very much, guys.